why do traders still believe that 50 is so on the table?
Well, there's been some reporting out of the Wall Street Journal that I think has driven some of the market pricing. Right now, we're in the media blackout ahead of the Fed meeting. And unfortunately, information vacuums breed uncertainty. And this is exactly what we're seeing. The market is questioning whether, the Wall Street Journal knows something that the rest of us don't. They're questioning, this is exactly what happened ahead of that June 2022 meeting where the Fed actually kind of let the Journal in on a little bit of, information ahead of the meeting. The problem is I don't think there's anything new in that story. So fundamentally, nothing has changed.
So, John, how do you see this going? What would it say if the Fed were to cut 50 basis points?
Well, we don't think the Fed is going to cut 50 basis points. And we think if they were to do so, again, that's like shouting fire into a crowded movie theater. There's no reason to be doing this at this point. The data supports 25 basis points, and going slow and steady, we think, makes sense.
At the end of the day, if they went 50, and the reason I ask this so much is because the odds in the market seem to be rising, not fully favoring that direction, but closer to it than they were before. Could they go 50 and then go 25 after that, Gennady?
Well, I think that's the difficult thing to communicate, right? How do you tell the market, oops, we're starting really late, so we're going to go a lot faster, but the next couple are going to be slow, so don't worry about it, but we're also going to be data dependent, right? That tightrope is extremely tough to walk. So what they want to do is tell us, look, we're going to start gradually. If we need to go faster, we can certainly go faster. I think what's more likely is they go 25, keep the door open for 50s, so that if the next two payroll reports after the September meeting, let's say they weaken, we could certainly accelerate into a 50 basis point a meeting pace if it's necessary, but not necessarily right now.
So then, John, to that effect, do you believe that that could be the case as well? What does the labor market look like to you that would justify even those 50 basis point cuts later on in the year?
Well, yeah, I mean, look, the labor market is certainly softening, and we're getting a lot of micro data from companies talking about the low-end consumer particularly struggling, and the middle-income consumer is really starting to suffer in terms of wages relative to what we've seen in inflation. But I think the logical is exactly what was just discussed, which is start with 25, see some more data. We talk about being data dependent. And if the data continues to soften, then you can hit the accelerator. But starting at, going from 0 to 60 feels like it's probably not the right course. And I think the market will actually interpret that negatively. I would expect stocks to sell off if we start to see a 50 basis point in September.